WTI prices continued to move in a rather tight range for the past several weeks, indirectly displaying some uncertainty in the oil market. Traders have a lot of information to consider at this point, with a number of geopolitical and technical subjects moving prices and making things interesting for market participants. In this report, we will explain the main subjects driving oil prices currently and provide a technical analysis displaying levels and trends that could prove useful. My name is Angelos Zitis, and this is the RNFX Oil Report for the 12th of May. The oil market's sensitive nature towards geopolitical tensions is currently exposed with the ongoing Russian war in Ukraine. However, the International Energy Agency, through its report for May, stated it did not see oil supply levels being impacted by sanctions on Russia. The constant rise in output by both the US and the OPEC Plus group in the coming months could compensate for the losses, while the lower demand from China as a result of the ongoing lockdowns imposed in some provinces may defend the situation as well. Moreover, excluding Russia from the global oil supply could put further pressure on other oil producers like Saudi Arabia and the US, requiring them to be even more consistent with output. In this scenario of any other oil supply disruption from other major oil producers, we could see oil prices being lifted further. On Wednesday, the 11th of May, the important Energy Information Administration's crude oil inventories weekly release displayed the large 8.5 million barrel surplus. This is the second highest surplus in the current year for EIA, and WTI dropped approximately $0.5 upon release. WTI's price reaction could be implying that traders' attention for now remains on the subjects we mentioned above and not the weekly releases. As we are referring to the US oil production, we must note that oil analysts expect countries maneuvering Russian oil to be turned towards West Texas Intermediate, possibly favoring US oil companies like ExxonMobil and Chevron. The stocks of these companies have managed to gain on a year-to-date basis as the ongoing circumstances driving the oil industry are working towards their advantage. On a separate note, we would suggest traders to constantly monitor developments in China, as they could prove crucial for predicting future price action. China's virus lockdowns could impact global demand and subsequently move oil prices. We move now to our technical analysis. Please note this is WTI's 4-hour chart. WTI continues to trade in a large sideways motion between our currently noted R1 107.85 resistance and the S2 93.75 support level. This range is currently highlighted on our chart with sky blue in order to emphasize the current trend. If the R1 107.85 is clearly breached, then a move towards the R2 115.15 line is likely imminent. Our highest resistance remains the R3 123.50 barrier, which was last tested in March and remains the year-to-date high for WTI. In the opposite direction, a move below the S1 100 support barrier could force the price action even lower towards the S2 93.75 hurdle. Please note the S2 has not been breached downwards since late February, making it a solid barometer for the strength of a bearish momentum. As our final support, we note the S3 87.50, which could be engaged in a rather intense sell-off scenario. The RSI indicator below our chart seems to be running across the 47 level, displaying some bearish interest in the short term.